Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. This is a holiday edition. We are recording Friday evening after the markets close on the 17th instead of on the weekends. We don't quite know yet what we're going to do next weekend, whether we're going to have a show, we're going to take a week off, but we'll let you know. Anyway, we're here today. My name's Ben Maldonado, and I'm here, as always, with Barrie Hederachi. Hey, Barrie, how are you?
I'm doing good. I don't think I have any nails left after this week, but man, it was a nail biter, eh? Just all around.
Oh God, up and down, up and down. It's like I had to take my seasickness medication, but it's good. Listen, yeah, the volatility is good if you have the levels and you're disciplined. It's actually good for us to see this kind of movement. The key is to only play when you have an advantage, and that's a hard lesson we all have to learn, but I think it's one that comes to heart in markets like this. Start off with risk, the proxy for risk, which is Bitcoin. Not surprisingly, it had a relatively weak week, could not sort of get up over the half square here, and to me, it looks like we're consolidating and waiting for the next move lower. As long as we're under this half square, the pressure is to the downside, and we're going to most likely, odds will favor, we're going to test down here in this 41.7, 41.800 area. I don't see a lot that's bullish about Bitcoin, especially since we did test the half square early this week, and could not get over it. So for me, Bitcoin is a sell. Where are you on Bitcoin, Barrie?
Well, I think it's it was definitely a sell against the line. Mm-hmm. All three times, right? The high, right, and the midway, and now we're stuck down here. So probably it's weak, no question about it. I think it's a test of the lows are probably due now. So we'll see how that comes.
Absolutely. And when we talk about levels, there's a spreadsheet, which when we post the video, we'll post a link to the spreadsheet with all the levels that we discuss here for all the different markets, and even the markets we don't cover on the show, we'll have up on the spreadsheet with the important levels. So make sure you check that out. Also, if you like the videos and you like the content, please, click the bell, subscribe, do all the things that YouTube asks you to do, so that we get the feedback that the content is being liked and appreciated. Thank you for that. Let me throw it over to you, Barrie, and let's cover the big five, and then you'll come back to me, and we'll hit a few commodities that look interesting going into the holidays here.
All right, sounds good.
E-mini can't get through that brick wall, can it?
It's look, the joke is just all that drama in the news and and all the feeds, but here we are, right? We've been in this box for an entire month.
Yeah, for a month.
It's got to be nuts. And now it's we're at, let's just cover from last week. We talked about this 47.26 is the number to really take out, and looks like we almost tried to do it post FOMC, right?
Yeah.
But it really couldn't hold it up there for other than a few hours overnight, and rolled right over, and that was it. From there, we came back down and settled. We talked about the midway, the midpoint, the 50% of the square being a key level to watch this week. And, it wasn't exactly clean, but we've been in that area, right? We've been just in that box. So for next week, clearly we need to break out of the box here, one or the other. And we're adding a new level to watch. It's really, I think at this point, 4,600 really has to be held. If we take this out, I'm afraid we're probably going to go and test these lows and maybe even lower.
Mm-hmm.
Right? It could just go down and test the old October, September lows.
Mm-hmm.
So 46 is really key to watch. And also, we have this trend line we've had in place for a while. Now to the upside, I think, we can mess around in the middle, but really, if you're going to get some kind of a decent rally off of this sideways, then 47.26 really is the level we need to clear and hold above. And if we can do that, then I think we're clear for a while, at least 4,800 in the short order, right?
Yeah.
Just like we could be hitting 4,500 in short order if we take out the 46. So
no question.
That's sort of how I see the balance in the short run. And let's take a quick look at the weekly chart. And this is really where it's playing out, man. We're 3 squares up, square 52 on a weekly chart, and
can't get through.
6 or 7 weeks ago, we called this out and said, hey, this level is going to be a little bit hard. Unless we can really get above that, it's really going to provide a bunch of resistance. And that's what it's done. And what's interesting is, though, normally when we hit a sort of a hard square level, the market could have a big reaction and, sell off or, at least come back, correct quarter of the square or half the square.
Mm-hmm.
But here, we hit it just like the NASDAQ on your square. It really didn't sell off. It just kind of kept biting, grinding.
Stuck.
Yeah, kind of stuck, which made us talk about, possible distribution patterns in some of the stocks, right?
Mm-hmm.
So that's possibly going on. But for now, this looks, the fact that we didn't sell off, I have to say, it's in a strong position. So we're holding, well above a quarter of the square. And it's just the question is which one's going to wear out first, right? Is the resistance going to wear out or support going to wear out? And so far, we've been banging up against it and really trying to get through without much follow through.
The interesting thing is, I remember one of the conversations we had this week where we were talking about, these patterns look very distributive, and they're sort of not accumulation patterns. And it's like, what we have to do is figure out, when do they let go of the rope, right? When are they gonna, if it is in fact distribution, when are they going to let go of the rope and be in position for that? And that's the tough part here. It's really difficult, because it's such
especially in light
spot.
of this, this kind of a mess over here.
It's a tricky spot.
It's tricky, and that's why we use these levels to help us kind of frame the price action. So, and so far it's helped. It shows why levels are important, right?
Mm-hmm.
And the good thing is we were able to get these levels right away, very early in the game, and they seem to hold. So we're on top of it. So those are the numbers for next week. They'll be on the spreadsheet. They'll be updated. I've been updating it lately. And anything else you want to add to the E-mini? I know you're going to cover the NASDAQ, but anything here?
Just that, we're watching the fact that we can't get through that resistance, and they keep probing the bottom too, and it's like you said, which side's going to let go first?
Mm-hmm. So here's the bigger cycle that we looked at. We are 450 days out, and we just hit it this week.
Wow!
And I think we looked at it a little bit. And sometimes, we go sideways into one of these, just like we've done here, and that could trigger the sort of the drop, right? Some kind of a counter trend. So we'll have to wait.
Yeah, it's funny you have that cycle right there, because one of the charts I'm going to show is the 30-year and a cycle that's coming through. So it fits right with next week. So we are at a decision point for sure.
Yeah, I mean, you can see they come and go. So that's why we really have to watch the levels to see how we handle this. And all right, speaking of bonds, let's go over here. We talk about this every week. It seems like it hardly moves, and and I've had these same levels on here for months. One what to do. They'll have to stay on. Last week, we talked about 160.20 being support, and that, if it held, we're probably going to go up and test the 164.26 area up here, back in the fray. And that's, we held the lows and we moved higher. So, so the 160.20 proved to be a decent value. So we're moving higher. And so far, looks like we can continue to go and test the 164. If we do, we might get really interesting 3 drives to a high kind of a pattern. If we can put in a high up here, right? That would be an interesting.
Yeah, I had a potential sell setup on bonds last week, but we never could take out that 160 level,
Right. Yeah, this needs to go. But we're just, look at the entire thing. We're just really stuck there. But what's important is, we're holding the lows, we're making higher lows. So, it is pushing higher, and it's important to see that. And because it's making higher lows, I'm bullish on it for now.
Sure.
And getting on to the weekly bond chart. Well, look, same story. Look, I could say the same thing, but I've been saying the same thing for the last how many months. So basis the weekly chart, 158, 159 is really the support. We've tested it and keep bouncing. And more importantly, what happened last couple of weeks was we broke this trend line connecting 2 weekly highs, and we got above. And last week we kind of came and retested that. And this week we are moving out of it. So it's possible that we could have a run up here. And so we really got to watch the daily for the daily to see how it plays out exactly. Okay. Let's
another tricky spot.
Yeah. Well, crude, pretty much the same story here, but on a smaller scale. We've been boxed in right there for a couple of weeks now. And what's important is our 69 level is holding fairly well. And we're starting to break the trend line to the upside. And my position is still, if 69 holds, then I think we could easily go in test 77. And if 77 goes, then probably 82 and on up. So again, just like last week, the 69 is the key level to watch for next week. And if it holds, then we have the 77 that opens up. Let's take a look at the weekly crude. Again, looking at the bigger picture, look, we broke out of the square 52, and right here, came back to test it. We're making higher lows again. If you take this line, right? Well, maybe that's not a higher low, but it's holding. We're making higher highs. Of course, that squared out. Then we expected some kind of a correction. We got it. And if this is all sort of playing out well, that this low here should hold. That's a low, earlier this month, December 3rd. And if that holds, then we should probably go up and challenge the highs at some point. So I think the weekly low looks okay. We're looking for a move higher off of that. And basis daily, we're looking at the 69 number to hold. And that's going to be our key pivot level to watch. Moving on to gold. Well, the 1765 we've been talking about for a while. And that's because it's been holding for a while. And we were looking for a move higher. We got this little bit of a false break last week and immediately pulled up. Can't say we're out of the woods yet because, this is a pretty good sideways channel we got going. So, we could be going back and forth until we get some kind of a break. But I would say for now, 1765 is the downside we got to watch for support, and 1832 is really the break area level we have to break out for a decent trend. If we're going to go up and test the highs of the square, this is a square of 90 coming off low March. So if this is all going to work out, then these are the two levels we're going to watch to see how the balance shifts.
Yeah, I'm going to talk about gold and silver. They're on my watch list now.
Yeah. Well, look at this, right? With this whole big triangle that we've been talking about.
Mm-hmm.
And not much to say. I mean, we went a little lower, they bought it back up, still in the range. The 1767 basis the weekly is a key level. We're holding above that for a few months now. Same story. Let's see how it happens. Right now, not much. It's back and forth and filling and but that's what happens before a big move. So you got to watch it every week, every day, and keep track of it, right? Take a look at the dollar. Well, if you guys are watching this every week, then I've been really bullish on the dollar, and from around May, actually. And now we've been looking at this 97 area is resistance. We need to really take that out and get out to about 99. And I think if we can take out 97, then 99's within reach. I thought we might come down and test the 95 level, which is pretty much where the half of the square is. But we didn't even, last week we didn't even come down there. We were holding up, really making higher lows. So it's I can't say anything but bullish for now.
That triangle's got to resolve too.
On the dollar, this little thing, this one, yeah, it kind of broke both sides, right?
Yeah.
So
typical Fed action, right? Post Fed action.
Yep, but got both sides. So going on to the weekly, look, this fork can only hold for so long, and I think they pretty much squeezed right into the corner of that.
Yeah.
That's one thing. The other is that we ran up into this 45, and I thought, again, I don't know if you guys really watch, people watching, if you guys really watch these squares and see how things work. But normally the idea is, when we hit a 45 cycle, you'd expect it to correct, at least 50% of the move, or 1/3. But here you can see, we did 45 weeks. And the correction is really the very tight consolidation. So that's strong. Everybody's buying it up. And if we take out these highs, you can clearly see it's the 2/3 line. If we take it out, we can certainly go higher. So let's keep that in mind. That's the dollar. So we're watching it. I give you guys these levels. Go on to the euro. Well, big surprise, right? Another box. That's what I was looking at this week. I'm like, what am I going to talk about? Everything's just sideways, right? There's not much to say. And I think pretty much the same story for the euro. Unless we take out the half square, which is around 120, we're going to be stuck in here. To the upside, it'll be around 138. So 138, 120. And, we call this out. Really nothing to call out. It's just a square, right? We were at the quarter line between a quarter and a half, and we got caught, and there we are. And there's not much to really do there other than wait for some kind of a trending situation, other than trading off the edges. So, yeah.
One of the things that's interesting, Barrie, is we you say there's boxes everywhere, and when that happens, when you see that historically, it kind of lulls you to sleep right before the next big move.
Exactly. That's exactly.
I think that's what a lot of these charts are telling us, is that there's a big move coming, because the energy's been building up in these either triangles or boxes or consolidations, and You can't go on forever like that. There's a fast move coming in many markets.
Right. I mean, just looking at the past, you can see how things break out. Like, look, we had a little box situation here, and you can see once we broke, it was down for months and months, right? Mm-hmm. You see that? Mess around for a while, right? Mm-hmm. We had another box situation here. Again, once it broke, that was it. These pullbacks, corrections just can't get over that box. So they pan out. Now here's a big triangle here, couple 3 months, and once it broke, boom, it's gone.
Big move. Yeah.
So they do come, and this is, it might be elongated, but it's coming. So it's a matter of just being patient and waiting for those things. Just like commodities, you just got to wait out the consolidations to catch the trending parts, trending sections. Here's our Euro weekly chart. Again, we've been watching this 1/3 of the square for support. And well, we've been there a whole month, and it's almost getting boring. So what happens. Now, look, we talk about big moves. If we take this out, boy, I'll tell you what, we're probably going to go check these lows. Mm-hmm. I'm not sure how fast, but that's the direction it's going to go. Mm-hmm. And to the upside, if we can take out this dotted green line, blue line around 139, 138, 139, and I think then we have a chance to go up and test the 160s, 170s. So that's a little ways off. For now, we're watching these lows. Have you noticed how everything's at some sort of a
decision point, right?
Decision point. Yep. So it's possible we get faked out. Market will try to fake you out. So we got to be careful and watch the daily and the short-term levels for that. Speaking of short-term levels, I was just going to say, there's a box here, right? And I was going to share this 4-hour chart that I share on Twitter. Mm-hmm. And if you look, it's clear how the lower boundary has been working for a while, right through here, and upper boundary up here. And if you just wait for that, and trade off of those, it's worked just fine. Again, I talked about 4,600 being a key level. Well, one of the reasons is this: if we take this out by, a little bit more, we're gonna break this, and we have a downside is fairly open, right down to 45. Basically, it is almost free fall.
So, a lot of air pockets.
This is a open area, and to the upside, we're sliding up and down this like there's nothing around. So there's no traction in here till we get up to the upper level, which is 4750 or so, and 46 down here. So those are the levels. And if we break out to the upside, we're at 48 and some change. So those are the major levels that we look at during the day. Well, that's all I got. Let me send it back to you.
Very good.
Speaking of hanging by the thread, there's that.
The brick
wall. How many times can you sell against the line? That's the question.
Crazy, right?
Well, a couple of months worth.
Yeah, a couple of months, and we've been talking about this for a while. That the fact that we couldn't get
since October, here, man, as far as I can remember, right?
Yeah, the fact that we couldn't get through here was a negative sign.
Yeah,
and the other thing you and I talked about this week, Barrie, was that when the ES made that sort of false break high after the Fed day, NQs got nowhere near their high.
Yeah,
and that was again another tell and another sort of divergence to watch. I put in this potential ABC target because, we've been stuck below here and we've tested the half square a few times, just like the ES in your chart. They've closed it right on the half square essentially. So, it's sitting on a knife's edge here. It sure looks like it wants to go down and test this full square, which would complete an ABC. So I noticed this week that NASDAQ was really, really relatively weak compared to the Dow and the S&P. So there's money coming out of there, and we may see it continue this week. And I was also thinking about that. We got all these triangles, all these consolidations, all these rectangles, where price has been trapped. Wouldn't it be the most ironic thing if they busted them all on a holiday week next week?
Yep.
And timing is pointing to that too. So it's not sort of far-fetched. There's a lot of timing that's coming in where, with people sort of not paying attention or being distracted or liquidity a little less, they can really move these markets and break out of these consolidations. So paying attention next week, even though you may be distracted with family and holidays, might pay off nicely. Anything you have to add here on NASDAQ before we jump to the next one?
Look, I think the NASDAQ and the S&P were at critical levels. You saw the lows today versus where I'm looking for weakness, which is 46. We tapped that this week. Actually, we tapped it today. Yeah. So we're not that far from sort of a, breaking level. And S&P always pushes a little further. So let's see how we resolve this. But it's critical that we start moving away from 46. We're going to sort of have any kind of a upward movement going into the end of the month.
Mm-hmm.
So and Kiwi is right there. We can't really lose much more. If we take out that other previous low in December, I think it could run. It has a lot of room to run down.
Absolutely.
And that lower trend line probably wouldn't mean anything.
No, I agree. We'll watch it.
So the levels are key here to figure out which side to be on. No question about it.
Mm-hmm. So here we have the 30-year. This is a little different chart than the daily that I normally show. And the reason I was showing it is similar to some of Barrie's work, where he shows you the timing with calendar days or trading days. This one is using arcs to show timing and moves, and you can see it's been working really well since the fall of 2018. And the reason I wanted to show it today is next week we're at a decision point. We're going to hit the next arc, and we've either got to break out and get above it and move away from it, like here when we came to the arc, we went up and we had this little 2-3 week rally, or we're going to do something like this where we hit the arc and we start correcting and we start following the curve down.
Mm-hmm.
And it's a decision point. It's next week. Again, ironic. It's a holiday week. Liquidity is going to be less, and there's potential for big move. And if this market's going to make a big move, the Treasury market affects all markets. So Barrie showed you timing on the ES. Here's timing on the 30-year for next week. So it's really going to be important, and I think it'll really pay good dividends to watch these markets closely, watch your levels, and be ready to move and react based on price action. So I don't have a bias as to which way yet. I'm trying to go into this with an open mind. We can break up. I mean, as you can see, we've been for 6-7 weeks here, we've been basically chopping sideways. Mm-hmm. So we want to watch and see, the levels on the spreadsheet. Do we break the top level? Do we break the bottom level? And try to go with, the direction that price tells us, because we should get a decent move out of it given the timing that's coming. Now let's take a look at the grains. We talked about the grains last week as one of the few standout groups in the commodity space where there was potentially actionable ideas and actionable markets. Wheat's being one of them. We saw some more weakness this past week in wheat, but it found support and found its low right where you would expect, which is on the full square. And if you look to the left, structure-wise, it's on top of, the highs from earlier this year in May and August and October. Mm-hmm. So wheat, I think, is setting up for a move higher. We don't know whether it's going to be a blast off the new highs or, maybe we just get a bounce up and test the full square up here at 830. But this is a bullish market. This is a bullish, a few weeks ago we did the monthly videos, and the monthly is very bullish. So this setup here on the daily looks supportive of higher prices going forward. Anything you have to add on wheat?
No, I think we had a decent correction. I think we're at the right level to take a shot. So yeah, it's. I mean, if you're not going to trade corners, it's definitely something to start watching to see if it develops into some kind of a trend here.
Absolutely. Corn is another one that we've covered last few weeks, and this week, last week we were sort of bumping up against this resistance and staying below, bumping up and staying below. This week we started pushing a little higher, and we actually got a few closes, including today's Friday close, weekly close, above resistance. I don't know what the news is going to be. I don't know what is coming, but somebody has been buying this thing for months. Right. See, we had this washout low in September where we false broke with previous lows and got through here. Went up, made a high, rolled over again. Everyone's thinking, oh, corn's going to new lows. Well, we made a higher low, pushed up again, made a higher high, and another higher low. Pushed up, made another higher high, and another higher low. And this week we got another higher high. So somebody is accumulating corn and buying corn. And again, we have no idea what the news is, but corn looks bullish. Barrie, you and I were talking about corn this week. Anything else you want to add? I can't remember the insight you had, but I know you really liked the way corn was looking.
Well, just that we've been inching up, and it looks like there's a kind of a triangle-ish kind of a break that could set up. And, it's at the gate. We just want to see when we break up and kind of settle above that line, your square line. I think that's the key. And we're just about settled today, right? I mean, we're opening.
No, we're above
right
it.
The line.
Yeah, just above the line.
The low is at the line. So we're there. So next week's going to be critical to watch, see what happens.
I know we were talking about, we were saying how the market looked to be controlled, like somebody was capping it to not let it get away. You know what I mean? Like they wanted to buy more, so they were capping it purposely and keeping it from breaking out. And that's what this sort of price action was looking like to me, is that, because it kept pushing up, and really small bars too. I mean, nothing dramatic, no big range days or anything like that, all small bars, but pushing. So corn looks good.
Yeah,
I would not be at all surprised if there's some news coming, which is very bullish for the price of corn, because that's what the chart is telling us.
And it's not just corn. You saw wheat kind of gearing up even after that big correction. Corn really didn't go through, it's in a different cycle, but, it's also getting ready. So there's something about the prices that are starting to look a little bullish, right?
Absolutely. And here's another one telling the same story.
Mm-hmm.
Here's soybeans. And this has been the laggard in the group, by the way. This has been the worst performer. If you're looking off the highs in May or June, it had the deepest and steepest correction. Mm-hmm. But you'll notice what we did this week and where we closed. We broke the major downtrend line from these two highs in May and June. We pierced it, closed above it. And again, we've been making higher highs and higher lows. We stayed on top of this square here, which was very key. Now, we did run into resistance at the high today, which is okay. That's normal. Right. And we had a little bit of a pullback. But here's another chart and another pattern that's showing accumulation, so showing somebody wants to own it. and they're willing to pay up for it. Corn, they kind of wanted to keep a cap on it and keep where they were paying fairly tight. Here, they pushed in the last 2-3 days, including today, where they were really willing to pay up for this commodity. So beans, like wheat and like corn, are showing signs of accumulation, signs of good news and higher prices, odds on getting higher prices in the future. What else do you want to say about beans? Because I know we were talking about beans this week as well.
Well, we're looking, it's very similar to corn in a sense. We're looking at that half square line. And as far back as you go, look, this is the line to watch, right? I mean, go back to 2021. You see that big pullback was right onto that half, right there. And then in June lows, right? And then once we got under September, trying to get above it. So here we are. So to me, look, we cleared that. I think it's a fairly good sign, and it's a worthwhile trade, right? It was a worthwhile trade coming off that lower square. That was the first sign, right? Holding that, and now we're about to break that. Really, the key
key resistance.
Resistance is also sort of the flipping point, right? The trigger level. So
with these commodities, the momentum when you get a move, as you can see, is really something to watch.
Right.
And that's why we try to find the lowest risk, earliest point to get in, so we're there for this sort of ride. And that's what these 3 grains look like they're doing, is providing a setup where the odds favor something like this could happen.
Right.
Here's gold. Gold has, I've been talking about gold for a few weeks now. It's been frustrating everybody, bulls and bears alike. Essentially, a few shows ago, I talked about how, we've basically been trapped in this half square with a few deviations outside, but mainly price has been trapped in here. The thing I saw this week, why I wanted to highlight this chart is, we had the low. We've had a series of higher lows and higher highs. But what we did this week is we pulled back right to the apex of this triangle. And that is a classic pattern that sort of sets up for the next move and a continuation move in the direction of that original break, which is higher. We tested here. We had a sharp move off of this low, and it was kind of a false break low with here if you're looking at it. So I think gold is setting up, again, telling us that not 100%, but odds favoring that something's going to be happening that's going to result in higher prices in gold. Based on this pattern, based on this big sideways we've seen, the move should be fairly explosive. Where are you on gold, Barrie? I know you covered it in your thing, but looking at this daily, what's your thoughts on that?
Well, I think, we've been in that sideways. So, we really need to get a clean break. We had a sort of a try in November and we fell back into range. So, I'm bullish, but I'd like to really see some, we're getting some higher lows, but I'd like to start seeing some higher highs, at least to be able to clear that square and settle up where the November highs were. I think
1835 is the key level with this square.
Right.
You can see how many times we tried and failed too.
And that's close to my number. So that's a level to watch for sure.
Yeah, this is on my watch list. I just think the price action and the lower time frames are showing. I like the speed of this move that came out the last 3 days, and that's a little bit of a change in character to all this other garbage here. It's sort of more like this kind of type of move. And maybe we get another one like this where, it doesn't go to 2000, but we pop up and maybe we can make a little higher high. And we can test up here, around 1925 level. So I'm watching gold for that reason. Last one we want to look at is silver. Has a lot of similar characteristics to gold, except its correction has been mostly sideways since the high, the February high here, around a little over 30. We've been basically doing this sideways. We had another sort of push lower this week, couldn't make a lower low, found support on this half square again, and we've pushed out and we've pushed up hard for 3 days. I'm watching it similar to how I'm watching gold. It looks like there is been serious accumulation the last few days, and we're looking for triggers on lower time frames to get involved. I think, again, I don't know what the news is going to be. I don't know why the sentiment's going to change, but it looked like for the last 3 days anyway that somebody wanted to own gold and silver in a big way, post the Fed sort of announcement on Wednesday. Where are you on silver? I know we haven't talked much about silver lately. Where are you on silver?
Well, waiting.
Mm-hmm.
I think that, if you're going to trade corners, they're right here at hand. If you're looking for a trend, I think we need to clear that full square to get rolling again.
Right.
So,
and that's all about style, right? And what you're comfortable with, and how you trade, and what your methods of entry are.
Yep. Style and tactics.
So the big thing, I think, for me, I mean, that's the things I'm going to cover. The softs are all sort of still in consolidations, where they're probably looking at more weakness. The next move out of their consolidations is going to be some more weakness. So there's no real strong trade ideas there. We talked about a potential coffee short. If you look at the spreadsheet, I made some comments there about the setup and the potential setup for there.
Right.
Crude and natural gas, again, are correcting, big moves up. They're still correcting and consolidating. So as far as I'm concerned, there's nothing, in terms of my work, there's nothing to do there either. Copper's the same. It's stuck in a huge triangle, really chopping around up and down, waiting for certain levels to get cleared to where we can, again, start looking at trading that. Otherwise, I think, as we said earlier, it's a big week because much of the globe is sort of on holiday, and yet timing wise, we have a lot of important timing hitting this week. So I'm going to make sure I pay attention, because there may be some things breaking and some opportunities for us to get involved in trades with really, really favorable risk reward. What are you looking at this week, Barrie?
The big focus is really crude and the S&P. That's it. We'll see how it goes.
Excellent. We're not yet sure of our holiday schedule, whether we're going to, I know we're not going to be recording on Christmas Day, but we don't know whether we'll do a show earlier or do something.
Yeah, we could do one on Thursday, or Friday's half day, right? So
yeah, Friday's Christmas Eve. So we'll post something, and we'll let you all know, when the next show will be. And obviously, if there's big moves in the market, we'll want to make sure we cover them. But everybody have a great Christmas, have a great New Year's, and we'll be in touch soon.
Very good. Thanks, Ben.
Take care.